Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, February 8th. Okay, guys and gals, I hope you had a nice weekend. I hope you had a good time probably watching the Super Bowl with friends and family. Hope you had some time to recharge your batteries, get ready to go for another trading week. On the blog site today, on today's post, I want you to take special note of a link that I provide to a 1 hour podcast that features Ben Hunt, Dr. Ben Hunt, that discusses narratives. That's a fancy word for storytelling, and its relation to the markets and how important narratives have been to Wall Street ever since the beginning. And the connection is made between narratives and the recent events around GameStop and Reddit and the Reddit rebellion, and we're gonna stick it to the man and all that kind of stuff. I think it's a real fascinating insight into looking at who were the real puppeteers in that whole episode, and what narrative did you buy into? What narrative was being fed, put out there for consumption, and how was that accomplished? And to what end? I think that we all need to keep in mind, and I think it's important, just to understand the game that's being played. I think it makes it more difficult to win in any game if you don't understand the rules, if you don't understand the game that's being played. And I think this podcast sheds some light on that. So take a look at that. Also, in today's blog post, in the written section, I detail a lot of the market risks that are out there. And basically what has been set up in the environment that we have now is extreme market risk versus extreme liquidity. And there's really no other way, I think, to set up this scenario. We've got stuff so far out in left field, whether you're talking about valuations or speculation or extreme positioning. I list about 10 different things where we are at extremes that have literally never been seen before in the market, where you'd say the bottom's about to drop out. Any person looking at that, not knowing the full picture, would look at some of that stuff and say, man, that looks scary. And it is scary. But the other side of the equation is liquidity being thrown at the system, both in terms of monetary and fiscal spending, that's never been seen before. So we've got all the powers that be, the central banks globally, global, countries led by the United States and the FOMC, throwing the kitchen sink at everything. We're going to have a COVID relief bill coming out soon, I'm sure. That'll be pushing $2 trillion. They're going to come right back after that, I believe, and go for a infrastructure bill. And the Democrats, not even getting into politics, just getting into power, who's in charge, has the votes to do whatever they want to do. If they get bipartisan support, great. If they don't, they can do what they want. So more spending is on the way. So I go through some actionable activities that you can do as investors and traders in your account to kind of balance out the risks versus the reward scenario. One thing you don't want to do is try to be a hero and short the high. this has gone far enough. I'm going to put on a big short. And it just keeps going higher. We could be in the early stages of a massive parabolic blow off top where we could see SPY go to 450 or 500. It sounds crazy now, but it could happen. And we want to participate in that if it does. We also know that when they pull the rug, it's going to go fast. But we will see it. When we're looking at, let's just say, SPY 2-hour right here, we're going to see the big red bar. The key is not to put your head in the sand whenever we see that big red bar and start scaling out and becoming more and more defensive. Where you get killed is if you're at max leverage, you get that big red bar, then you get scared, and then you put your head in the sand and say, well, it's just a one day pullback, and they'll fix it tomorrow, and then they don't, and then you get another big red bar, and then you're behind the 8-ball. And if you're trading with options, you know that those events have a dramatic effect on the value of your options. That is the main reason why one of the key things in my actionable activities is aggressively roll and protect your positions. And for those that aren't familiar, roll and protect, if you find an option position that goes deep in the money, roll that up to even money, take that profit to the bank, keep your overall risk profile in check, basically the same. And as the advance continues, continue to roll higher and higher, move your stops higher and higher. Don't get suckered in by using more and more leverage as the FOMO and the greed increases, because that's a setup for getting trapped in a rug pull. So stay long. Don't try to short. Keep your risk profile in line, and realize the game that's being played. Realize the risks that are out there. And I think you've got a good chance to both participate and protect yourself against catastrophic loss. Now, today, I think it's a relatively easy technical setup because we're at all-time highs across the board. We don't have a lot of complicated technicals to look at, but let's go through and look at the levels. SPY 2-hour at all-time highs. I think on these longer time frames, if you stay long against 385, you're going to be fine. If we were to drop below this channel, below 385, then, we'd have some stuff to talk about. But here at all-time highs, and with the pre-market higher, it's about 645 as I'm starting this video. Everything is green, from gold to oil to copper to silver to the Nikkei. Everything is green. So no risk-off impulses out there at this time. So stay long against 385. 30-minute chart. Friday, once we had the gap up, just spent it consolidating. If you're on smaller time frames, I think 387 is the lower limit for what you want to be long against. And if we do a breakout here, then you've got 388.50 to shoot against on the break above this little consolidation area. And I've drawn in a little trend line here just as a gauge. These aren't absolute, oh my God, if it broke below, all hell's going to break loose. But as you see here, that coincides with 387. if you were trading on shorter time frames and price lost 387, chances are you're going to get a move down to 385. So if you're tactically trading, if you're super active, that would be a place where if you lost this trend line, if you lost this support level, you could try a tactical short for a pullback into support. But keep in mind, you should be looking for long entries. It's fine to take a tactical short, to play from 387 to 385. But at that point, I would be covering and looking to go long. If you had gotten somehow left behind here and you weren't long and you got that pullback into 385, I'd be looking to buy there with a stop just below. Qs continue to move ahead. I think 330 on the 2 hour is a good level to shoot against. We're at the top of this channel. Pre-market, I think we've actually popped above. Notice we've got bearish divergence here, both in RSI and PPO. Those bearish divergences have been persistent, and they really haven't amounted to a whole lot, to be honest with you. I think it's something you pay attention to, you file it away, and understand that that's a yellow flag, but it shouldn't stop you from being long or participating in the upside. But it is a yellow flag letting you know that all is not 100% peachy keen. You ask yourself, we're making new highs, but with lower momentum and lower RSI. It's not really what you want to see. Qs 30-minute. I still think 330 is your line here. If you got a pullback into 330, I'd be a buyer there. And you've got the recent high here just above 332, where if you recaptured this trend line and pop this, then you can move your stops up and use 332, 332.50 as your line to shoot against on short time frames. IWM is in outperformance mode. As we've talked about, small caps, the reflation trade, rising interest rate environment is great for banks, great for cyclicals, early stage, recovery type stuff. We talked about the hospitalizations and deaths of COVID rolling over. I have not looked at those trends here for this week, but keep an eye on that. As long as you see the 7-day moving average of hospitalizations and deaths rolling over, I think the reopening trade remains intact. It's not without risk, because we've got these variants out there that could raise their ugly heads and change the narrative. But for now, I looked at yields were up again this morning, a few basis points, I think to 1.19% on the 10-year. Those continue to go higher. So that rising interest rate environment should be good for IWM. And here, I think on the 2-hour time frame, 218.5 is a nice pivot level to shoot against. If we go to the 30-minute chart, you could move that up to 220 and even 221, depending on how close you want to play it to the vest. How close you want to keep your how tight you want to run your stops. But I think IWM should be an area of your focus in the days and weeks ahead, as long as this reflation trade seems to keep working. If you're looking for a little outperformance, I think IWM is a place to look. And I wanted to make a couple points. especially for you active traders, but also you swing traders out there. There have been a ton of long entry opportunities on this run up here, starting down here at the bottom, this reversal point. And even if you didn't catch this low, I mean, that's fine. We had this 209.50 area highlighted. We got, price firing out of the hole. The recapture of this level was an entry point. The recapture of this breakdown candle at 211 was an entry point. The recapture of 212.50 was an entry point, and came up here to 213.75, 214, something like that. Had a bad close, might have got stopped out here, which is fine. I mean, that's trading. But then the next day, recaptured it right away, gave you an opportunity to get back in, came up. We had talked about this on Thursday, get long against 215. Despite the gap, there was a chance to buy there, right? Get long against 215 or any place along here. Got a nice run up to 218.75 where price consolidated. So you should be thinking long if you're not long already. I mean, even at all this point along here, say, you just dropped in from another planet, or you just refocused on IWM. What I want, I want to try to find an entry point the next day. This was Friday. Gap up. Oh man, I missed it. I wanted to get long. Very next candle. Look, you got to reach back all the way to the Thursday close. That was your buy. That was your buy right there at 218.75. So price did give you a chance on Friday to get in, and you got you got $3 out of that. Well, maybe closer to 250. Let's see, the low was 218.75, and the close was 221.65. I mean, pretty close to $3. So that was your trade right there, and price never gave you a reason to get out. So anyhow, never give up. That's my point. Never give up on a trade. Even if you missed all of this, you could be, hanging your head. Man, I missed it here. I missed it here. I missed it here. Look ahead. Where's the next trade? Where's the next opportunity? Where's the next objective location that I can look for an entry? And then be ready. That's all you can do is be ready. We're just coming out of the Super Bowl and football season. The great quarterbacks and the great players forget that last mistake. They don't dwell on, oh man, I just threw an interception. I suck. We're going to lose. Blah, blah, blah. No, they quickly hit the erase button and look ahead. Where's the open man? I forget the pass that I just dropped, and now I make the catch. I'm a good player. Have confidence. Look for that next opportunity and seize upon it. And, this was a great example of, being patient, not chasing the gap up, waiting for price to come back in. You got that chance. Be ready on the buy trigger, and that was a great trade. Let's run through FATMAAN, which has been soggy lately, to be frank, but you never know when things are going to pop, and you can make very nice trades. during the day, even on names that aren't running incredibly quickly. Facebook, 270 is your clear pivot. If price can take out 270, get long and look for 274. Below 270 favors lower. Personally, I'm not looking for shorts. So for me, just personally, between 266 and 270 is no man's land. Now, if price rolls over and breaks below 266, then I might look at a tactical short to get down into 263 and possibly 260. But I think the key level for today is 270. Apple, 138. If it can take out 138, it'll be on the back in the saddle after this poor post-earnings sell-off. It's recovered. 138 is your pivot. If it can take out 138, you can look for 141. Between 135 and 138, I view as pretty much no man's land. And then below 135.50, you might want to look at the downside if we're going to have some corrective activity. Tesla, 855 is your level. Above 855, you can look for 880. Below 855, kind of keeps it soggy. I wouldn't be looking to short Tesla. I'd be looking for a long entry. And if you got a pullback into 830, I think that's an objective level to take a shot. If for any reason it dropped down in here to 800, all the better to try a long shot. But for today, I think you can get long above 855 and look for 880. Microsoft, for me, it continues to be 243. I think if it can take out 243 and hold it, it can see 250. I'm going to be a buyer at on a breakout above 243. Amazon, free 50 club, $50 increments. 33.50 is your pivot. If it can hold that, I think it can find 3,400 and then 34.50 if it's on the up cycle. If you lose 33.50, then you're going to come back and test 3,300. So these $50 increments continue to work really, really well. I would highly encourage you to use those if you're an active trader of Amazon. So today, 33.50 is my line for keying off of for active traders. Above that, look for 3,400, and then if it can take out 3,400, try these prior highs up here, possibly even to 34.50. Google had a nice day on Friday, was up almost 2%. Here's the bracket trade setup from the big gap up. If it can take out 2,100, then I think you find 2,150. And remember, 2,200 was our measured move target from way back when on the weekly chart. There was a weekly bull flag breakout that pointed to 2,200. And that is playing out so far according to plan. Really, the danger point would be on any kind of move back into this earnings gap. I would be looking for long entries. If you took the opportunity to get long in this recapture of 2050, you're looking good so far. You're about $50 to the good. Now you're looking for a breakout above 2,100. If you get that, I'd be moving up your strikes and your stops to 2,100 with a stop just below. If you're not in, I think that's a logical place and an objective place to get long and look for a move to 2,150 and possibly 2,200. Netflix, This was a spike on news that they were raising prices in Japan or Asia or someplace. They faded that, came back to trend. I think your pivot is 550, right here. If they can pop that, then I think they open the door to 570 and possibly 590 to 600. I did see a lot of institutional paper at the end of last week looking for those higher 570, 600 strikes at the end of this week and into February expiration in 2 weeks. So there is some institutional money looking for Netflix to go higher. So let's do a quick recap. Narratives have always been a part of Wall Street, and I think it's important to understand what they are, understand who's feeding them to you, understand what their motives are, and for you as a trader, as a market participant, to understand the game that's being played. The 1 hour podcast, I think, is a good investment in time just to orient yourself on what narratives are, the role they're playing, and to recognize them when they're being told to you. I think, in our normal lives, if we go out into the world and somebody tells us a bullshit story, we have a sixth sense about that. It's too good to be true. The bullshit meter goes up and we become skeptical of that story in the real world. I think a lot of times we lose that objectivity in the markets and buy into them, buy into the story that's being told. And I think if we just take a step back and understand that narrative and be objective about our thinking about that, we'll be better informed and be ready to trade it in a more productive way. Also go through market risks and the liquidity that's out there with some strategies on how you can trade it and not get hurt in the process. And then from a technical perspective, we're at all-time highs. So continue to roll and protect your positions aggressively. Keep taking money to the bank. Understand that a rug pull could happen at any time for any reason. We saw that in GameStop, a pissant company that nobody's heard of, that very few people trade, in a matter of days has most of Wall Street in a tizzy. And that just shows you how finely balanced everything is in the market. It does not take much to unravel things. We went from all-time highs to the 50 EMA in a heartbeat. And it just so happens they bought it up just as fast, but next time it may not break that way. We may, find the 200 just as quickly. So be ready for that. Be ready for anything. Keep your head on a swivel and keep your wits about you and keep your risk profile at a comfortable level. And I still think you'll make plenty of money, but you'll be able to sleep at night and even possibly be able to capture the downside if and when that happens. So if you're new here and you think the commentary was beneficial to you and helpful to you, please hit the subscribe button and the alarm bell and you'll be notified of all my content. Jump over to the show notes where there's a link to the blog site and you'll be able to read in on those things that I discussed in the video. And also you'll be able to register for all my content. And that way you'll get a nice email each and every time I publish right to your email box and you won't miss a thing. You'll also get an invite link to our trading room where you'll become friends with some great traders. You'll be able to get a lot of ideas and inspiration and camaraderie in your trading, and that can only be a good thing. So get off to a good start in your trading week. Have a good trading week, and I'll talk to you soon. This has been Chris Buss with Traders Profit Compass. Talk to you next time.